watching Biz Asia America. I'm Michelle McCory at the NASDAQ market site. NYSE Euro next is hoping to rehabilitate the London interbank offered rate, or Libor. That's the interest rate banks charge when they lend money to one another. Now, Libor has come under fire since a 2002 scandal where banks had been manipulating the rates. Now, the U.S.-based owner of the New York Stock Exchange says it will try to restore credibility to the index. Liling Tan reports.
It's the promise of a new beginning for Libor, tainted by the 2012 scandal that saw London banks accused of manipulating their interbank lending rates for their own benefit. Now, NYSE Euro will take over the reins from the British Bankers Association and attempt to restore Libor's credibility. But will it work? And will the new arrangement prevent the type of manipulation exposed in 2012?
I think it will. I think that's the short answer to the question. And the reason is because you're really aligning interests much better than you were before. Before, when the British Bankers Association was doing it, there was an interest in the banks to manipulate the Libor rate, because especially during the time of the crisis, because it was adversely impacting their cost of funding by advertising that their rates were a lot higher.
Blitz says a stock exchange like the NYSE is in a better position to run Libor because it needs an index to work for the market to work, stimulating more trading activity.
There really isn't a reason for them to manipulate the number. There's no, and that's what I mean when I'm saying there's an alignment of interest between who's creating or really finding out what the rate is versus who's using the rate.
NYSE Euro says it's well placed to restore the credibility of Libor by leveraging its brand, regulatory experience, and technical ability. Libor rates account for some $550 trillion in financial and banking contracts. NYSE Euro selection is part of a larger government-led overhaul of Libor following its rate rigging scandal. The probe has already seen 3 banks, Barclays, UBS, and RBS, slapped with $2.6 billion in fines, and several arrests have been made. The investigation continues. Liling Tan, CCTV, New York.